Hi everyone, it's Chad about another video. Today I'm doing a 5-minute stock analysis, just a quick one, on Sonos Inc., the audio equipment provider. Stock's been hit pretty hard, down 26% from the start of the year, where it was $30 to now $22. That's even after coming up a bit from its yearly lows around 18 and 19. It's a decent company, trading around 20 times trailing earnings for 20% year-over-year growth in the most recent quarter, and that's considering all the supply chain issues. Really impressive, so I want to see how this company is doing, whether I think it's a buy going forward or whether I think this is a stock that still has further to fall. So Sonos is in the premium audio equipment market. It sells things like soundbars, speakers, static speakers mainly. There's a range of soundbars, some of them really quite expensive, up £500-600. I own one myself, competing mainly with the likes of Bose and Sony, so a lot of big boys in this space, definitely in the premium end of this space, and a lot of serious competition, which is of course a downside, but Sonos is forming a nice niche for itself in the market, and these products are well reviewed as quality products, and I can speak from personal experience that I really like the sound quality on these. The global premium audio market is valued around $6.7 billion as of 2018, and is expected to reach nearly $11 billion by the end of 2025, growing at a 7.1% compound annual growth rate between these years. Of course, during this time, the technology moves on, and they've now integration between portable Wi-Fi for enhanced connectivity and things like that, load of new features and an increased price point, and Sonos is one of the early progenitors of this, and looks set to capitalise on this going forward, and it's currently growing far above that compound annual growth rate of 7%. So how did it do in the most recent results? Just shy of $400 million in Q2 revenue, up 20% from the previous year, driven by strong demand and improved availability of supply. They have been struggling a bit with supply of materials, of course, because these are Wi-Fi connected devices. They have chips in them, all sorts of chips and semiconductors, which of course have been constrained by supply. Gross margin of 44%, very, very impressive for this type of product, especially with the competition. Of course, it is a premium product, so we expect a good gross margin, but this is impressive. Down 300 basis points from Q1, driven primarily by increased component costs and higher shipping and logistics costs. But over time, that will return to normal, and we'll see an even healthier gross margin here. Adjusted EBITDA of $46.9 million, down 3% from the previous year, again offset by OPEX leverage and again increased costs. That gives an adjusted EBITDA margin of 11.7%. Not the most impressive in the world, but given the current situation and the state of play for this business, I think this is quite good. So as I mentioned, 20% revenue growth over the previous quarter to just shy of $400 million. That was a decrease in growth year over year by quite a large amount, because in Q1 2021 they grew 90% over the previous quarter because of a huge demand for its products. Continued strong demand for the Roam, the One and the Arc drove Sonos speaker categories. 18% product revenue just from the Sonos systems and partner products and other revenues supported this further. There are of course industry-wide supply chain issues, continued backlogs, so we're expecting depressed revenue here of course, and it's still pretty strong by this metric. 20% growth for a hardware company in a very tough market is very strong from my point of view. EBITDA margin declined slightly, and adjusted EBITDA was down slightly year over year, but again I'm going to kind of give it a pass here because of how tough the environment is. Sonos continues to pour a healthy amount of revenue into research and development, which is of course always good. 15% up 15% year over year to now just shy of 65 million, primarily due to higher personnel related expenses, increased product development costs, just increased costs generally, as many businesses are seeing. One thing that I'm really impressed with is that the sales and marketing budget only went up 4.82% for the quarter, with a 20% revenue growth. And this shows that, as management have previously mentioned, a lot of these Sonos products, and how I came to buy a Sonos product, was purely word of mouth or going to someone's house and hearing the sound quality. That's exactly what happened to me and why I value this product so much. As a percentage of revenue, all these costs are 40%, which is quite high but not ridiculous, and only 200 basis points higher than the previous year. Obviously I'm going to be doing some further research into the company, but I really like what I'm seeing. It's a great product, as I can attest for, and that word of mouth marketing that it receives, essentially free marketing, is really helping it. Has a great brand reputation. I think the products are quality and forging a nice niche for itself in a very competitive space with the likes of Bose, Apple, blah blah blah. All sorts of companies competing in this space. They also have a lawsuit which it's looking like they're going to win against Google. Google have allegedly breached some of Sonos' IP. They potentially receiving a nice royalty from them going forwards, or something like that, or a big settlement. That'll be nice to keep an eye on. But overall, I like this company. It's trading at 20 times earnings, which is not ridiculous for 20% growth. we'll see how it does in the future, because the guidance was a little spotty, and I'm expecting that earnings to go, the PE to go up slightly over the next few months. But I value this company. It's trading at a reasonable valuation. I think it's a nice company to keep an eye on. But of course, this is just my opinion. You should do your own research, due diligence, and not just take what I say as granted. But I would appreciate to hear what you think of Sonos stock. It's not a very well-known stock, only 3 billion market cap, very small company. So I'd appreciate to hear what you have to think. Like and subscribe if you're enjoying the videos. I'll see you again next time.